JBlog, 6th of March 2011. Starting out today by looking at oil. Oil has definitely had a massive run up the last little while, partially due to mostly due to the problems in the Middle East, obviously. And it's not just Libya, there's other places that are presenting a problem as well. And of course, there's the unknown, Saudi Arabia. Libya is an interesting one simply because even though Libya only accounts for 2% of the world's oil amount of oil produced, it actually is very high quality rich oil. So you can get about 3 times as much gasoline, or more precisely diesel, out of low sulfur diesel out of Libyan oil than you can out of Saudi Arabian oil. So that's one of the reasons why this is a lot higher than it than you would think it would be. And this is, of course, West Texas Intermediate crude, which again is not much of a statistic. The European oil is actually much higher at this point. But anyways, we had this run up, and of course, this is the big problem here. Is this going to stop the recovery? I mean, in my mind, there is no recovery. There is about $3 trillion of new debt piled on by the government, and that's what's driving this recovery. Because if you look into the details, this is not much of a recovery. As has been said many times, this kind of thing, which is a deleveraging cycle rather than an inventory-driven um, recession cycle, usually lasts 7 to 10 years to play out on average. So we are still very close to the front and nowhere close to the end of this quarter if historical precedent holds. So this is oil. Oil is obviously overbought at this point. The RSI is high, together with a new high in price. So there could very well be a pullback at this point, but this is very emotion driven at this point. There's also a study that just came out that says that any excess capacity in the system might run out by 2013. So there's a lot less excess capacity. I mean, Saudi Arabia keeps talking that they can easily make up everybody's shortfall, but if you look at the Simmons study, Twilight in uh, Twilight in the Middle East. I don't know what it was called, but anyways, Twilight something something. Saudi Arabia has vastly overstated its reserves as it is, and even the WikiLeaks have confirmed that as well. But that's oil. Natural gas, on the other hand, completely different. And again, if there was a recovery of some sort, natural gas would be higher than this because we would be consuming a lot of it, especially in a cold winter like we've had this year. But natural gas is going nowhere. I bought some natural gas a few days ago. I don't mind stocking up a little bit on natural gas and sitting on it once in a while. Once again, this is sort of a low point, so I don't mind buying things cheap and just sitting on them. Gasoline, of course, big story because that's going to drain money out of the consumer's pocket. Yes, it's going to look good on the GDP numbers, but the consumer is basically spending their money on fuel and and on food, and that doesn't do much for industrial production. So again, everything seems to be going sky high at this point. Gold did have a little dip and has been rising again, but it hasn't really made a new high, not the definitive new high here. Realistically, it should be higher considering what's going on in the world. So this is a little bit weak. Silver has been stronger, much stronger. It's basically back up on trend. That's because the silver market is a lot smaller. And of course, there's the silver gold exchange rate, which is still listed as, if you look at gold silver exchange rate, which is how many ounces of silver do you have to pay to get 1 ounce of gold, and that exchange rate is still at roughly 42, 41, whereas when they come under the ground, it's 1 to 16, and even that might be understating the actual value of silver because silver actually has industrial uses while gold really has very little, and silver has been used up dramatically while gold has been preserved. Um, so there will be a silver shortage at one point, and this exchange rate might go as low as 1 to 10 at one point if a real shortage hits. Um, Gold in euros has also gone up a little bit, not as much as in the US dollar, which once again brings me back to a main theme here is the US dollar continues to drop. How far? I don't know. I figured it would pick up, but of course, with the never ending inflation that the Fed and Washington are producing, it is hard for anybody to have any faith in the US dollar. On the other hand, it's not really that easy to have any faith in any other currency, any of the major currencies, because obviously Europe is not in much better shape, and many of the other currencies are simply too small to be a store of value. The VIX has shown some life signs here. The market is getting a little bit worried, not as worried as I think it should be, but there is some worry coming back into the market, which there should be because we're starting to end the governments of the world, including the United States, are starting to enter a point where people start asking questions, as in, do I really want to own their debt or not? So the VIX is starting to have a few questions about that. Copper took a bit of a dip here, but it's back up again. Again, in a time of inflation, and we still don't know if this is inflation or deflation. It's probably inflation in one part and deflation in another part, but anything physical that can't be printed, of course, is something to have in an inflation. Um, Going over to the stock markets, let's look at the U.S. The New York Composite Index. It had a bit of a dip here. It had a big drop, and it has not exceeded those highs that it set late in February. Um, so this is a potential top here. Of course, that's just a question of how much money they want to sink into it to keep this party going. We continue having some. We had some negative divergence here, just a little bit, and declining bottoms, declining tops, not much. You have to squint a bit to see it. Um, so the market continues going strong. The 10 exponential continues to be over the 30 exponential moving average. The 10 line, the red line, continues to be over the green line, so that continues to be bullish. And as I said, it's just a question of how much money they want to sink into this before they finally give up. It could be a while yet. We'll see. So far, there is no um, bearishness to be found. One thing I have been investing in lately is Canadian dollars. The Canadian dollar, obviously being an oil currency, is going up because people will need to purchase Canadian dollars in order to purchase Canadian oil. And Canada is the largest oil exporter to the United States. So therefore, the Canadian dollar is going up. It's also a relatively stable um, currency as well as a stable government, and it has one of the most solid banking sectors in the world. So the Canadian dollar should really go to 105, 107 on this run, and then we'll see how much further it goes from there. So I have been going long the Canadian and short the US. You can do that via the ETFs. FXC is for the Canadian dollar. Oops, didn't want to do that. What else do I have? Oh, here's an interesting long-term chart I found of inflation-adjusted oil. Going back to the 1970s, so in today's dollar, oil in the 1970s would have been $20 and then $30. There was a big spike back here in the early 80s, which of course drained a lot of money out of the economy and sent it to other places, and then dropped us into a recession that we then fought our way out of. And of course, here was another big spike up to $140, dropped us once again into a recession, and we're basically going straight up again. And this continues to drain money out of the average person's pocket. As I said, it's in interesting chart that I came across here. What else do I have? Some news stories I came across. Rare earth continues to be an issue. China tries to not export any rare earth anymore. Basically, they're saying you can't buy our rare earth. You have to open factories in our country to use anything that needs rare earth. Again, that's going to be there is some interests that are meeting that are not compatible there. China continues to export things and not really importing that much, and if I mean, not from the United States anyways, does import a lot from Europe, but eventually this cannot work, and eventually there's a potential for an opium war number three here. Um, we'll see how that goes. So, anyways, Australia blocked the Chinese takeover of a rare earth company because it didn't want to see its strategic resource owned by foreigners. Uh, there is an article talking about that 7% on unemployment might or might not be in by 2012. I can't see it. And especially if we're only talking U3 or U4, maybe 7% is possible. But if we're talking U6, then that is not going to happen. There's simply too much spare capacity in in the employment picture, and too many people have simply fallen through the cracks. They're not being recorded anymore. That doesn't mean they're no longer unemployed. So those numbers are, for the most part, fake. And of course, Geithner tells Obama that debt to GDP uh, is going to be a problem in the future. Well, no surprise there. $3 trillion. I mean, the official deficit is 1.5, but if you actually look at the increase in total debt, it's closer to $3 trillion. I can buy a recovery for $3 trillion as well, and that would be all nice and fine if I could continue to borrow $3 trillion every year. But eventually, that money pipeline is going to run out, and then what? Then where's the recovery? So that's why I continue to be bearish, but not really trading bearish at this point because there's no point. Uh, you cannot really bet against the Fed, against that machine. So just biding my time, sitting on the sidelines, taking some longs, trading some currencies, continue to be very bullish on uranium, and on some other commodities. But for the time being, the U.S. dollar, the S&P 500's P ratio is still at 23.93. There's no value to be found here. This market is amazingly overvalued on a historical scale, and I really don't own it. So just sitting out this one, and I know that eventually it will fail. All the best. Hope you make lots of money next week, and good luck.